Hello and welcome to today's Delta Credit Tip. So in the end, you decided, you know what, I'm just going to file bankruptcy, right? You're contemplating it, but you're worried because you're not exactly sure how it's going to affect your credit. You're not sure as how it's going to affect your lendability. You're not sure as to how it's going to affect your finances. And today we're going to answer a lot of those questions. So come on back, stay tuned for today's Delta Credit Tip. Hello and welcome back to today's Delta Credit Tip. So in the end, you decided, I got to file bankruptcy. I need a reset button. You've got judgments, you've got huge medical debts that are proven to be yours. You've just got issue after issue and you figure, you know what, let me just do this. But you're worried, right? You're not sure what it's going to do to your credit or your lendability. How does this going to affect your finances? Well, hopefully we're going to go through all these questions, answer them out for you so that you have a better understanding of what this will mean to you. If it works for you, come on, give us those thumbs up. Don't forget, comment below. Let us know what you think. Subscribe, hit that little bell so that every Thursday at noon, you get more information on your credit restoration process right out of the gate when we come out again every Thursday at noon. So let's talk about what bankruptcy does to your credit. And the way where we're going to start with is how it changes the content of your credit report. Well, first off, a bankruptcy is, of course, going to stay on your credit for some years if you're not able to get it deleted based on how it got there in the first place, which is a whole nother video, okay? But by and large, a Chapter 7 and a dismissed bankruptcy is going to be on your credit report for 10 years from the file date. So that's how long it's going to last on the credit report. If you're going to go for a Chapter 13, that one's going to be on your credit report for 7 years from the file date. Now, yes, that's a long time. Will it be as detrimental to your lendability the whole way through? No, and we're going to get to that in just a minute. But it's not the kiss of death for 7 to 10 years. It's, but it's going to give you a couple of hiccups in the front, which we'll show you how to overcome. Okay. The other thing that it's going to do is going to affect all the other accounts that you've included in the bankruptcy. All those accounts are either going to be A, deleted, or B, which isn't very likely that they all get deleted, so don't get too excited, but they should all reference the bankruptcy and go to a zero balance. Okay? And that zero balancing, that's a big deal, as we'll talk about in a few seconds as well. Okay? So again, 7 to 10 years, everything on the credit report should go to zero. And or get deleted, hopefully, through that process. And then there's the score. Will the bankruptcy negatively affect your score? Well, it all depends on how you go into the bankruptcy. If you're going into the bankruptcy and everything is late, everything's charged off, you've got a really low score to begin with and big balances to boot, well, more than likely, the bankruptcy is going to increase your score, right? Because remember how the score is calculated. The 3 top portions of your score are on payment history, debt amounts, and the average age. Now, you're going to lose points on the average age, obviously, because things are going to be closing out. Okay, and the payment history, well, that payment history was really already established when you went into the bankruptcy. You're either continuing to not pay or you're basically not paying from the automatic stay, but during that time, they're not reporting typically anyway, right? So if you're going to go from, let's say, $30,000 of debt or more to zero, then that's a positive thing for the credit. And it will actually lift the score. Like you may be at a 450, you may find you're at 520 after the bankruptcy, right? Because of that zeroing out of the balances. Now, if you were going into the bankruptcy with everything being paid on time, then you will discover a drop in your score, obviously, once you file that bankruptcy. Okay. Now, not all accounts are going to go to zero. If there are things that you want to keep in your bankruptcy, obviously those accounts aren't going to necessarily go to a zero balance. And if you want to know how that works, you just check out one of our last videos, actually the last video that we put out that talked about keeping those assets that you want to keep during, before, during, and after the bankruptcy. Okay. So as far as your credit report and your credit score is concerned, that's basically how the bankruptcy is going to affect that. But now let's talk about the actual lendability side of it, right? Because regardless of what's on your credit report, you're worried about, am I going to be lendable? I'm going to be able to buy that house or that car or whatever the case may be. And that's really the crux of how this affects your lendability. It's really about what kind of loan do you anticipate needing in the future. And there's really 3 tiers, right? You're talking either business loans, we're talking credit cards, we're talking mortgages, and we're talking car notes. Okay, so let's start with business loans. Bankruptcies for a business owner are really bad, and you want to avoid it if you can. But if you're just to that point where you have to do it, and recognize that that's a Chapter 11, right, potentially, that bankruptcy is going to really kind of do you in. And with any business loan, say through SBA, they're going to be typically looking for anybody with 20% ownership or more and up to 80% representation of the business on all loans. So if you're an owner of that business of any significance, then you could be hindering the future of that business's growth if it's contingent upon being lendable. And that's going to be a little higher of a mountain to climb. Now, when it comes to vehicles, there are always car dealerships willing to sell you a vehicle and finance it. Just whether or not it's actually worth what you're going to be paying is going to be the big question. But if you can't make it to work, can't make bills paid anyway, so that's how that runs. But my area that I really want to focus on is, well, what about the credit cards and what about mortgages? Okay. Now, when it comes to credit cards, what you will find is as soon as you discharge that bankruptcy, you will be bombarded with credit card offers. Why? Because they know that you can't file again for so many years. So you default, you're still stuck with them. You can't write them off in a bankruptcy. So you will definitely get a lot of credit card offers regardless right after. And it's going to be important that you get that to build your credit. But if you tune in next week, we're actually going to be talking about how do you rebuild after a bankruptcy so that you're lendable right away. Now, the last one, mortgages. If you're trying to get a mortgage, most lending companies are going to kind of have a moratorium on when you are lendable after a bankruptcy. And for each lender, it's going to be different. Most are going to have either a 2 or 3 year wait before they are willing to lend to you again. But there are some lenders out there, just like some car dealerships, that are willing to get you one day out of bankruptcy. You're just going to have to pay a much higher down payment, and you're going to have a much higher interest rate to get it done. Okay, but by and large, I would just kind of bet on a 2 year wait from the discharge date of your bankruptcy. Okay, but most important is what you do after. So watch that next video. Okay, now let's talk about what this does to you financially. So we talked about what it does to your credit and your credit report and your scores. We talked about the lendability piece of it, right? So now let's talk about finances. So again, at Delta Credit Restoration, we don't believe your credit is a score. It's a series of behaviors that lead to a score. And those behaviors are typically the financial ones that you display in your checking account, right? It's about having financial safety nets and having some buoyancy with your finances. And the one thing that a bankruptcy will do is it will strip you of all of your financial safety nets. Okay? And that's going to be really financially the biggest difference that you will find, and that is you're kind of out there in no man's land trying to rebuild your financial position in savings and in checking and retirement accounts and things like that. Credit, right? Having available credit to fall back on. Those are things that are going to be kind of stripped for you, and it's going to take you some time to rebuild those, right? Now, when it comes to your actual net, cash per month, well, if you weren't paying anything going into the bankruptcy. Okay, when the bankruptcy discharges all your debt, it doesn't matter anyway. Now, like let's say you were going to a Chapter 13. Now, obviously every month you're going to have a monthly payment on the Chapter 13, so that's going to affect you financially, right? But if you were going in with a Chapter 7 and you weren't paying the old medical bills, you weren't paying the credit cards because you were past due 120 days or more, you weren't paying on all these other charge-off accounts, well, them discharging those debts aren't going to make one bit of difference on you financially month to month. And that's something very important. A bankruptcy will not cure your money problems. It may fix your debt problems, but it doesn't fix your money problems. If your rent is $1,200 a month and you bring home $2,000, you're going to have financial problems, period. And the bankruptcy ain't going to have nothing to do with it, right? So from that perspective, unless you're filing a Chapter 13, it's really not going to affect your month-to-month financial outlook unless you actually change your income or change your cost of living. Okay? So again, stay tuned for next week as we actually go into how do you rebuild and become lendable faster after the bankruptcy if that's the direction that you're going to choose to make. So hopefully this information, albeit brief, is helpful. Please give us those thumbs up. Don't forget, subscribe and hit the bell. And if you've got questions or comments, put them below. We'll get back with you and try to coach you through this process as much as we can. All right? And in the meantime, make a choice. Make a change. Delta.